For nearly 2 months, Bitcoin has been trading over $25,000. With all of the bad news that we have seen in the markets, nothing is swaying Bitcoin from hitting 30,000, 40,000, maybe even 50,000 this year. But enough with the hopium before we get into the video. Even the stock markets are putting aside bad news, bad fundamentals, looming recessions, sticky interest, banking collapses, and setting new price highs for the year. Today's video, let's look at how the markets are unfolding as we close out yet another week, the first week in May. Make sure you've hit that like and subscribe to the channel. You know what I'm about to do. Tell you to go look at those links in the top of the video description, plus along with Bybit and BitGet, our channel sponsors that have free USDT, no trading required. Just got to use those links in the video description. And if you are one of the lucky guys who are in TIA Premium, there will be a discount if you click on the links up here. You could be hitting these great percentages like some of our traders are doing right now. 170, 100%, 66. There's plenty of it going on there, but more on that later. Let's get into the video right now. So the most recent updates we've had from the US, unemployment claims, not much has happened there. There's going to be the fundamental news of there was too many claims, there was too little claims, and now we're seeing the too many claims or higher claims than was forecast is turning out to be somewhat bullish. So when you start to see news that may have been bearish in the past start to seem bullish, you know that the times are changing. The cycle has been changing. We've been saying that for a very, very long time based on other data on the charts, the facts from the charts, not just the news announcements from the Fed. And so leading into the rest of this week, there really isn't too much left going forward. We have non-farm unemployment rate and everything else just seems to be on point, or at least the market is telling us that it is on point. The prices for the SP 500 have remained at these higher levels above 4,100 points now since the 27th of March. So since this particular week right here, that's 5 weeks ago. It is putting in higher and higher lows on the macro scale. We got the low here in October, back from the low in June. The things that we were looking at specifically on the channel, as these were very seasonal for the S&P, for the NASDAQ, for the Dow Jones, getting lows in June, cycle lows in October, and very significant lows in March, sometimes the cycle low itself. But we've had all of those, they've all checked the boxes, and now the market's holding up above its key 50% resistance levels time and time again. And now we're starting to put in even higher and higher lows at the next 50% levels. So all that is left is for the capitulation to the upside. It doesn't seem like the market wants to go down at this point in time. There is plenty of bears still telling us that it must go down at this point, but the market just doesn't want to do it. These analysts or TA experts just aren't reading what the chart is telling us here. As you get higher lows and hitting resistance, you can see what that pattern is. It looks like we're about to break out, but there can be some time. So let's just wait and see what happens from that point. Nonetheless, the week has closed out relatively well, slightly under the 50%. It would have been better if it was another 6 points higher, but what can we do? We don't control this market. So S&P 500 is looking relatively good. The NASDAQ also looking very good this week, hitting the highest price in 2023. These are not signs of a bear market. We're getting up there towards the resistance levels from the low that we put in here in October to the all-time high. So there's your 50% level. The 50% is at 13,600. This market continues to put in stepping stones to the upside. You can see the peak here, and just for the last 5 to 6 weeks, the NASDAQ has also been consolidating above this level. These are all the bullish signs. Now, of course, to the bearish side, if the bears are going to win this, if they're going to get this market down and break it down, passing this low, this is the only way that you can call a bear market is still on if this low is broken. For now, if the October low and all these markets is not broken, this has been the start of a bull market. And sometimes they take a little while before they get going. That's a typical sign that you'll see in most markets. They take their time because everyone's still wondering, is this bull, is it bear? And you have a lot of bears saying, well, this pattern is still the same that we saw in 2000. It's the same pattern that we saw in the past where, like you can see in 2000, we had this huge move to the top and then a little complacency bounce before the dump. This is nothing like that right now. They're getting their patterns mixed up, and we're seeing further upside at this point. So that's the NASDAQ. The VIX is also telling us that we've got further upside to come in these markets. The volatility has been wearing off since January 2022. So basically the top in the market as well. So we're just starting to see these lower prices. There has been a very good drop on the volatility, and we want to see that because when the volatility gets back under 17, this gives us a nice area for the bull market to continue on. You can see every single time in the past, this market has to come down and find its way into this zone. Maybe it's for a short period, maybe it's for a longer period like we've seen in the past, 2018, 2019, early 2020. Still a bull market. You're still going to make money to the upside in that case. Same sort of deal here from 2016, 17, 18 after the collapse in 2015. And you can go back and continue to test this time and time again. So this is all the back testing on this particular tool here. And we're starting to work our way back down into these levels, especially with the lower tops coming in as well. So all good signs for the bull market and very bad signs for the bears who are waiting for lower prices. They're getting squeezed time and time again, which can force them to capitulate to the upside. Often people think capitulation is only to the downside. You've got a lot that can happen to the upside, especially if there are shorts loading up, especially if there is just cash on the sidelines, which we know there is cash on the sidelines from previous videos this week. Make sure you have subscribed to the channel, hit that like button as well. So we know that that is happening. And the longer that goes on, the harder it is for the money sitting on the sidelines watching this market go up. Eventually, they have to get into the market because their cash on the side is not going to be making the same returns that the market is making. And if they're not even beating cash, then the institutions will lose their funding. People will start to pull that money out and give it to someone else who is making money for them, not just waiting on the sidelines in cash. That's the pressure they're under. So as we see this go up and they sit in cash, they're going to be pressured to get into the market to make some returns for their investors. For now, they keep spitting out the bearish news, the bearish narratives. I was on a Twitter space this week with some Bloomberg macro analysts who are calling for lower prices. Unfortunately, it doesn't look like the market is doing that. The market is telling you no. I don't know why the analysts are seeing the other side of this equation, but nonetheless, this is how markets are made up and this is how cycles form. This is how the beginning of bull markets occur. So moving forward to the US dollar, we've looked at this. The thing that could change here is if the dollar eventually goes on a little bit of a rally to test some of these prices, which we've been waiting for weeks now, then that could put a little bit of pressure on Bitcoin, cryptos, maybe even the stock market as well. But for now, this has closed at a new low. So like I said in the intro of the video, there are some new prices being hit now. The US dollar, there is the close for this week. I'll throw it on the candles for you. We're at 101.28, 101.28. It hasn't closed this low since April of 2022. So just over a year ago. It has not closed this low since that point. It's closing under the 50%. It still hasn't broken down from 100.8. So there's still some hope for the USD to climb back above. But nonetheless, this has been a very bad news time for the US dollar, but it has held up through that news. So we're just waiting to see what happens from the US dollar at this point. Not much can be said other than it is at a low price. It is closed the lowest that it has since April, and now we wait to see whether it's going to break down from 100.8, which could put a little pressure on BTC. As for BTC, like we said in the intro, it is now trading above $25,000 for the last 7 weeks. And you've probably seen these lines on my chart before, the kiss of death for the downside targets. I know this hurts some of the bears, but stick with me. It's good to have an open mind about what's going on out there in the market, especially if people are waiting for these lower prices. What the market is telling us is that it's not going to go down there at this point, especially after the breakout of the double top. When you have a very big macro bearish signal that fails at 50%, which it did here at 19.5K, fails on huge bearish news, which was March, the banking collapse of SVB, Silicon Valley Bank, and then Credit Suisse, and then Deutsche Bank, and then every other bank that's followed that, when that bearish signal fails, this is your trader's tip, and it breaks above that, meaning that it failed, it's most likely a signal to the upside and a macro signal to the upside. So what could happen from here? Maybe we top out here at 32, maybe 34, maybe 42. We'll see. The point is that wherever we top out, then we can start to measure the downside correction. And that's going to be an interesting point for anyone trying to buy the dip. I doubt it's going to break under around that 23.9, 24K with these tops being at 25.3. I doubt that's going to happen. I definitely doubt that we're not going to see underneath 19.5K anymore or 15.5K. So even though I have these levels up here, I'd pretty much say once this 19.5 came in and once the 25K was broken, I would say kiss your 15K, goodbye. That's what we've been saying on the channel. That has been many of the calls that we've had here. I'm definitely kissing both of these levels here goodbye now that we're above these levels. The only thing that could change this for the bears is if we can break down relatively soon over the next couple of weeks within May and get under 24K and close under 24K. So start to consolidate under those levels. That's pretty much the only thing that is going to, I guess, save the bears and hope for those lower prices underneath 15K. I think it's important to continue to add that in because there are still some bears on the sidelines with some hope. There's nothing that is guaranteed in the market. Although I do talk a lot about it being guaranteed, it's definitely not guaranteed. I might sound like that, but it's definitely not. But the statistics, the data, the history, everything is showing us that the probabilities are definitely on the side of the bears. The probabilities are definitely on the side of the bulls, I should say, not the bears. The probabilities are on the side of the bulls at this stage based on what we have seen in the past in this history here with the low, with the second low, and then the breakout of the accumulation zone and the breakout of the failed bearish signal. So while all this is going on, our members have been making profits to the downside and to the upside, to the long, to the short. You can see a lot of these profits that have come through since I last showed you this on the channel. 60s here, 50s here. It's a very honest space to show some profits. Peppy, 800% return on an 18 times long. There's not always going to be profits. I'm sure I can find a loss here for you. There you go, 14%. But made up for it here with 92 and 23. Trading plans are never 100%. Trading plans are going to have some losses. And if you want to learn more about that, go and check out the link in the top of the video description, TIA Premium. This is our premium course on trading, on investing for the macro cycle, getting into your positions before the markets take off and having a plan for trading. So these links at the top of the video description will give you those discounts before the price increases. Check those out. As for BTC, this week is shaping up to close as one of the higher weeks. We still have 2 more days to go until Monday. So stick around the channel, like, subscribe to the channel, have a fantastic weekend, get out there and surf if you are here on the Gold Coast or you got some good surf wherever you are. I'll see you guys at the next video. Until then, take care and peace out.